Hello guys, welcome to my online prep. Hope your preparation is going well and your exam is very near. For that purpose, we have come up with the revision series of Jaiib Exam for May 2023, in which we will be discussing chapter wise MCQ questions and we will be solving MCQ questions for your examination purpose. So if you are new to this channel, subscribe the channel because many more videos will come after this video. So just subscribe so that you will get the notification at the earliest. And if you have not downloaded my online prep, so just download it because you'll get a lot of free stuff and a lot of things on my online prep app. So let's get started. So we'll start from PPB paper, and this is a revision series where this is the first class. We will discuss chapter wise MCQ questions. So in this videos we'll be discussing about the banker customer relationship, which is one of the first of chapter of module A of PPB, and then AML KYC guideline chapter wise. So let's see questions. The banker customer relationships, the first question is, in what circumstances the banker become the debtor to the customer? So the answer is, the options are when a customer has borrowed the money, when the banker has borrowed the money, when a customer has applied for the remittance, all of the above. See, when the customer has borrowed the money, then this relationship, since customer has borrowed the money from the bank, then customer become debtor, and bank become creditor. Here the question is, in what circumstances the banker becomes debtor? So banker become debtors means bank borrowed money from the customer. So answer B is correct because bank has borrowed the money from the customer. When in the bank, when bank can borrow the money from the customer in terms of SA, saving account, in terms of CA, so we call it CASA and term deposit. These are the three types of method by which bank can borrow money from the customer for the purpose of lending and investment, and when customer demands, it should pay. So let's see the next question. The next question is, what is the relationship between the banker and customer in case of safe custody of articles? Still, the options are creditors and debtors, lessor and lessee, bailey and bailor, and agent and principal. See, creditor and debtor, when we have checked it that when customer takes money or when bank borrowed money from the customer for the purpose of lending and investment, then in that scenario bank becomes debtor and customer become creditor. When customer get the loan from the bank, in that scenario bank become debtor and bank becomes creditor and customer become debtor. Now here the question is a case of safe custody of article. The safe custody of article is a kind of relationship between bank for one time. So in that scenario, the bank become bailee and the customer become bailor. The bank become bailee and customer become bailor. Why? Because in case of safe custody article, the relationship will become bailment. So here the bank become bailee and customer become bailor. Lessor and lessee, when there is any lease agreement, when there is a rent agreement, in that scenario it particular leasing and hiring situation come out. So here this particular thing is safe custody is a one time relationship. It is not like that customer is coming again putting another stuff or article on the same things with the same contract, not like that. Here customer has come with the solution that he needs article to be deposited at bank, and bank take this particular guarantee that it will pay back, it will give back to customer when customer demands. So for the purpose of safe custody, keeping the articles in safe custody, that relationship is called bailment, and bank always become bailee and customer become bailer. Agent and principal relationship will establish only when there is a standing instruction. Standing instruction. Then there is a standing instruction like SI, when like you have given a check for attestation check, customer bank collect it on the behalf of you. So that relation is called agent and principal. You just ask your bank to debit my account for EMI. This is also called a relationship. This relationship also become our agent and principal relationship. Any instruction, maybe ASBA, you put money to invest in any IPO, FPO, then in that scenario bank become agent and you become principal. Next, a credit voucher for rupees 50,000 favoring Riza was wrongly posted to Manisha by the bank. Here, and the relationship established with Manisha is off. Here, the credit voucher of 50,000 favoring Riza was wrongly posted. It was supposed to be posted to Riza, but instead of Riza, it was wrongly posted to Manisha. The question is, if that kind of relationship wrongly credited, then Manisha, relationship between Manisha and bank will be which kind of? Will be creditor and debtor. Here bank will become creditor and customer become debtor. Here Manisha will become debtor. Why? Because see, Manisha is supposed to pay that much of money, that is 50,000 to bank, because it was not intended to Manisha. It was intended to be credited on Riza's account, but instead of Riza account, it was wrongly credited to Manisha. Manisha is liable because this is not Manisha's money. This particular money is not belongs to Manisha. In that scenario, law says that Manisha has to pay to bank. Then has to pay the bank. Manisha is liable. So the relationship will be creditor and debtor. Bailee and bailment, I told you, when there is a one particular thing that you are when relationship of bailment, then this scenario will come. Maybe especially if I talk about safe custody article is a bailment, is an example of bailment and bailee. Now come to trustee and beneficiary. Trustee and beneficiary, well, this relationship, trustee, when there is a third party involved, suppose any will of a particular person is given to for this person after my death. I just want to give my all the property to someone else, or maybe minor. So bank will become trustee. Okay, I just give you authority. So whenever any such incident happen, you just take the possession and give it to the beneficiary. So that relationship is called trustee and beneficiary. Lessor and lessee, when there is any agreement of lease agreement, this particular is applicable for locker facility, where you just ask bank to use it on rent basis. Right? So this relationship is called lessor and lessee. Next, the disadvantage of leasing to the lessee. The disadvantage of leasing to the lessee. Lessee is, who is lessee? Lazy is a customer in case of bank or any other person who take the property or take the things on lease. So lazy, what is the disadvantage? Deprivation of the assets ownership. Here, if you get any assets, any property on lease, you will not become the owner of the property. So you the always lessee will deprived of ownership, assets ownership. So this is the correct answer. Deprivation of the capital cost. Now you will not, capital cost is not involved. No risk bearing in case of natural calamity. Yes, no risk bearing in case of natural calamity. So when you take the any property, any assets on lease, when there is any natural calamity, you will not be responsible. So no risk bearing in case of natural calamity. So disadvantage of, what is the disadvantage? The disadvantage only that assets ownership not lying with the lazy. Deprivation of the capital cost. Yes, this is not the disadvantage, it's an advantage that you, if you hire anything, if you take any property on lease, your capital cost is not involved at all. So this is the one of the advantage. This is a no risk bearing case of natural calamity. Yes, all the above. No, deprivation of the assets ownership is a disadvantage. Okay, next. Dr. Hart's definition of the customer of bank is what? See, someone who regularly visits the bank, someone who has the saving account, someone who has an account or for whom the bank habitually acts, someone who has a credit card with bank. See, customer definition is not defined in any law, but it is from some past judicial verdict or judgment, it will come out. So there is a Sir John Fogett. He has come with the duration theory. Sir John Fogett. The duration theory. So what he said that any customer who is having an account and for a period of time he operated, he actually transacted, then then that person will call a customer. This duration theory is discarded. Now it is not applicable. But Dr. Hertz has given the customer definition that any customer, anyone who has an account or for whom the bank habitually act is called customer. So this theory has been given by Hertz. So there are three theories. Three theories are there for customer. One is customer theory given in duration theory by Sir John Fogett, and then second is Dr. Hart, and the third one is for the purpose of KYC. So this definition in your exam question will be asked in three types. Be careful while reading the question. If the question is asked as per duration theory of John Fogett, maybe John will not be there, name will be not there, but yes, duration theory is there, then you understand that this is where customer has a duration of transaction, then this definition of customer will come. Now again, when there is a given that as per Dr. Hertz theory, what is customer definition? Customer is having an account or for whom the bank habitually act. This is the second theory. And the third theory will be, what is the customer definition for the purpose of KYC? If it is given, then it will entirely different. So be careful when the question comes in your exam that what is the customer theory. So don't get confused among these three customer definition. Okay. So we will discuss the customer definition for the purpose of KYC in the next questions. I mean, in this question, which of the following is closely connected with money laundering? Now, customer relationship has finished. Now, let's see. Important question. One of the important question: which of the following is closely connected with the money laundering? Money laundering. Human trafficking, cyberbullying, tax evasion, environmental pollution. Human trafficking is not related to money laundering. Cyberbullying is not related to money laundering, because you just defaming or someone on internet, so that is called cyberbullying. Human trafficking, you know that. Tax evasion, yes, you are just avoiding tax. Where you are supposed to pay the tax, you are avoiding tax. Environmental, there is no relation with the environmental pollution between money laundering and environmental pollution. So the answer is tax evasion. Okay. Next is the first stage of money laundering cycle. So what is the first stage of money laundering cycle? Money laundering cycle will what? See, you remember PLI. This is a three sequence. First what? A person do placement, then how? Then layering, and then integration. Right. So first placement, money comes from a small account or a small saving account, so somewhere from a legal source or illegal source, then it layered up was what? It is layering. So many a account, so many account are involved. First placement, collect money, and then started deposit in terms of small deposits, or in terms of investment or something like that, and then it comes to integration. Integration is the ultimate beneficiary. Maybe this fund will go to abroad, and where this fund will seem like a neat and clean legal source of money. So ultimate goal is integration. When it comes to integration, the fund is withdrawn or invested in real estate or maybe luxurious things to buy. Then this is the cycle. This is a money laundering cycle. There are three cycles: placement, layering, and integration. So first is answer, second layering, and third is integration. Next, the purpose of the Financial Action Task Force. Financial Action Task Force. What is this? Financial Action Task Force. The Financial Action Task Force, it was created in 1989 by G7 countries. Group of 7. तो एक ग्रुप ऑफ 7 में कौन कौन कंट्रीज है? कनाडा इज देयर, फ्रांस, देन जर्मनी, देन इटली, then Canada, France, Germany, Japan, then UK and US. So they established this financial action task force for combating money laundering. But after 9/11 in 2002, they included what? Terrorism financing also. So the purpose of Financial Action Task Force is to prevent money laundering and terrorism task force, to promote financial crime, not to facilitate Ponzi scheme, not to legalize funds generated from the criminal activities. So the purpose of Financial Action Task Force is to prevent money laundering and terrorism financing. Got it? Now under PMLA, Prevention of Money Laundering Act in India, what is the punishment for a money laundering offense? Imprisonment for not less than 1 year, imprisonment for not less than 5 years. See, imprisonment for not less than 3 years but up to 7 years. So this is the correct answer. As per the PMLA Act, if there is any punishment under the Money Laundering Act or money laundering offense, then there is an imprisonment of 3 years minimum and up to 7 years. But if it is related to narcotic, drugs or psychotic substance, it will goes up to 10 years. Remember these things. Maybe question will come, if it is related to narcotic drugs, then what are the imprisonment, tenure of the imprisonment? So then your answer will be 10 years. Especially I am talking about two things, narcotic drugs and psychotic substance, right? Otherwise there is a minimum 3 years but up to 7 years of offense if there is any punishment under PMLA. Next, who is considered a customer under the KYC norms perspective? I told you there are three definition and duration definition given by Sir John Poggett and then Dr. Hurt, and the third one is under the purpose of KYC norm. Under KYC norms, this, so only the person in whose name the dealing are carried out with the bank, only the account holder and who's having continued relationship, those who actually act for the person in whose name the dealing are carried out with the bank. See, only the person whose name the dealing are carried out with the bank is incorrect. Only the account holders and who's having continued relationship, those who actually act for the person whose name the dealing are carried out with the bank. See, KYC norm says KYC is concerned the person who is dealing with the transaction and the person on the behalf of that person. Suppose you are at a bank and you are depositing money for A and B. So you are here at bank and you are depositing money on the behalf of B, or B have given a power of attorney to B. So what KYC norm says that KYC is KYC is for all A and B, whosoever is the customer. So those who actually act the person in whose name the dealing are carried out within the bank, and the person whose name or the person who is dealing, both are included, and the ultimate beneficiary also. So we will see in later chapter. Next we have FATCA. FATCA, the Foreign Account Tax Compliance Act, is defined as the global financial transaction monitoring system, a tax information reporting regime, an international agreement to combat money laundering, a framework for corresponding banking relationship. So the answer is the tax information reporting regime. FATCA is a tax reporting information reporting regime that any financial institution in India has to report to USA IRS, Internal Revenue System, periodically. So basically this particular compliance is for US citizen. Actually through this US wants that none of the citizen of USA use bank or financial institution to park their assets or any wealth outside USA without giving proper tax on those assets. So this is basically for US citizen. So other than US citizen, there is a CRS, Common Reporting Standard. This is for CRS of OECD, the Organization of Economic Cooperation and Development Council. So here for other than USA, CRS is there, that any financial institution in India has to report to proper authority if there is any internal government agreement. So if in case of USA it is a IRS, and other than USA it is a CRS. So in that for this, Government of India has inserted 114F, 114G and 114H in Income Tax Act. Income Tax Act for this purpose. So FATCA is now compliance in India. Got it? Next we have, what is the time limit for bank to report suspicious transaction to FIUIND? See, suspicious transaction, we know that suspicious transaction, any suspicious transaction, that has to be reported to FIUIND. The options are within 24 hours of the establishing suspicions, within 48 hours of establishing suspicious, and within 7 days of establishing suspicion, and within 30 days of establishing suspicion. So the answer is 7 days of establishing suspicion. So basically you have to remember there is a no limit, any amount or within any amount which is reported in STR, that has to be reported within 7 days, right? Next, which of the following transaction must be reported in monthly cash transaction report, CTR, cash transaction of 5 lakh rupees? Option is not correct. The question is which of the following transaction must be reported in monthly cash transaction report, CTR, monthly cash. See, monthly reporting, which of the following transaction must be reported in monthly cash transaction report of CATR? So which type of transaction report? So any amount that is above 10 lakhs has to be reported in CTR. So monthly report monthly report, CTR, these are monthly report. 10 lakhs and above, cash, 10 lakhs and above, and any amount accumulated in a month of 10 lakh rupees, then that has to be considered. Then cross border wire transfer report, and 5 lakhs, whether it is outgoing or incoming, that both are has to be reported in monthly report. Next, what is non-profit organization transaction report, monthly CTR 10 lakhs, okay, cross border wire transfer report 5 lakhs, incoming and outgoing deposit and withdrawal, right, remittance, any remittance in India destination or origin. Then non-profit organization report, that 10 lakhs coming to India. And then CCR, counterfeit currency report. This has to be report 15th of any calendar days of any month. That you have to remember. Okay. Next, as per the Prevention of Money Laundering Act, the bank are required to submit the Financial Intelligence Unit India the statement on the suspicion transaction called STR, suspicion transaction report. It has to be submitted for transaction of rupees, we have already discussed, 10 lakhs and above, and within STR, suspicion transaction report, within 7 days, any report. CTR is for 10 lakhs, right? And any amount which is suspicious in nature, that has to be reported through STR, okay? And that is go to FIUIND. Next, which of the following is not an exception to the general rule regarding the secrecy obligation of bank under PMLA and PMLRB? So PMLA and PMLR under this act, what is this? Prevention of Money Laundering Act 2002 and Prevention of Money Laundering Act, record and rule. This is rule, this is act, okay? So there is a secrecy. If you work in bank, there is a oath that you, when join the bank, that you take the oath that you maintain some secrecy, some confidential information of the customer, and without customer consent you will not disclose it. So banking saying this particular act is, this particular clause is saying that apart from this, in which circumstances you can disclose the information, you cannot maintain the secrecy. Well, where the disclosure is under compulsion of law, any law that says that you have you have to provide that information of the customer, where there is a duty to public to disclose, duty to the public to disclose, where you have to disclose to the public any information for the sake of public interest, where the interest of the bank require disclosure. So these three are the clauses that you have to, these are the exceptional to the obligation of secrecy. Got it? Next. Okay, so this is the end of the chapter. We'll come again with the new chapter of PPB in class 2. I hope you find this particular video is to be useful for your Jaiib exam. So I again request, if you have not subscribed the channel, Just subscribe, share it, whosoever is preparing for GIB exam, it's going to be very beneficial for them. So let's meet in the next videos with the new chapter with the new question. Thank you, all the best.